Good afternoon, everybody. Thanks for joining us this afternoon for our quick, well, maybe not so quick, Spring Budget 2021 chat. Hopefully, most of you know who I am. My name's Dan, for those who don't know me. And here I've got my business partner, Mark, as well. What we'll be doing is, hopefully most of you have found the chat box that's on the right-hand side of your screen. If you haven't said hello in there already, do say hello so that we know that we found it. What we'll be using that for is, as we sort of go through it, obviously you may have some questions and stuff that come up from topics that we're going to be chatting about. So feel free to drop questions and so on in there. We will be keeping an eye on it. We'll try and get through as many of those things as we possibly can. Obviously, we might be slightly time restricted on stuff. So if we don't, we'll try and get back to you with any things that we don't cover. So purpose really of today is that rather than go through the detail as such within what's already been announced, I've dropped a copy of our budget summary within the files that you can access. We're just going to be talking about the implications of some of the announcements and how we think that might affect businesses, individuals, over the coming year and years ahead, obviously, with some of the announcements that were made spanning quite a wide time scale. So what we're going to do is I'm going to kick off. I'm going to ask Mark to pick one of his first subjects on it, and we'll go from there. So over to you, Mark.
Well, hello, everyone, and thank you for joining us. As I say, we're just going to do implications, but the fact we talk about implications, this is our assessment of what we think might happen. Obviously, our crystal ball is no better than yours, but we'll give you our assessments. I thought I'd start with just a general overview. What do you think of the budget? I'm glad I don't have Rishi's job. I think I'm pretty good. I think Daniel's brilliant. And both of us, I don't think we want Rishi's job. I think he's done a good job with that budget. Propped the country up phenomenally. Doesn't matter what colour you vote. I think he's propped the country up wonderfully. And this budget didn't kick anyone too badly. There's been a huge amount of press activity about capital gains tax, inheritance tax, pensions. Perhaps we can all learn from it that we don't get overexcited about what the press say, and perhaps wait until we get the announcements. That'd be quite nice. However, I think there's going to be an interesting date coming up. So I think it's a great budget. Please watch out for the 23rd of March. I think that's a pretty important date. And 23rd of March, the government has told us that they're going to put the consultation documents out. What do we believe that the government mean by consultation documents? They have to tick a box that says they've consulted, so they're going to consult, but actually this is what they intend to do. It's meant to cover a 10-year period. Capital gains is going to be in there. Inheritance tax will be there. So we have got changes, but we've got some time now. I know Daniel's done the same as me. I've had clients contacting us literally in the last month since the press started on about CGT. Quick, can you move everything around? Quick. At least we've got a little bit of time, folks. So we'll see what the government intends to do, which I think is nice that we've got some time to make some planning action. So there's a starter. There's an overview of what I thought the budget was like. Dan, do you want to go on to another subject or?
Yeah, I think obviously it was quite clear that it was set out in 3 steps. One, to continue to support. The second one is how does it get paid for? And then obviously some investment and opportunities for people going forward in terms of how that might look. I think it's fair to say that with the support schemes that have been in place, whether it be furlough, the self-employed grants and stuff, have been very fair. It was anticipated, I think, that they were going to be extended. September, again, I think there's good reason for that. I think that's given people some time to know that, we're all hopeful that we're going to hit these dates that have been set out on the roadmap, but it also gives businesses time to recover because of, come the 21st of June or 22nd of June, not everything's going to be going at 100%. So I think things like the job retention scheme and so on are going to support that pretty well. I think my main one on the job retention scheme, though, is that there was a lot of talk about the job retention bonus when they first announced the scheme. which just disappeared probably the back end of last year when they extended the furlough scheme for the first time. If you search it on the internet, it will just say an archive file. So you can't access that information anymore, or you can only see what was previously said. And there's been no mention of that scheme ongoing come end of September. And it's there. So it feels to me that that's one that's going to have been parked completely.
I think that's long grass. Yeah.
But very, very quietly done. It hasn't been widely announced that that's the case. And I know, having spoken to a number of clients around the time, because I think it was supposed to be paid in February, March time. That was a consideration for them in that first stage of furlough in terms of what they were going to do with their
just remind people what it was, Dan. Yeah, and it's not there. But remind them what it was.
Yes, the retention bonus was a case of if you retain staff for 3 months after the furlough scheme was due to end. So that was going to be covering the months November to January. As long as they were paid above a certain rate, then you would receive £1,000 per employee that was retained within the business over those months. So it's not an insignificant amount for lots of small businesses out there to not have that support.
And to be absolutely silent and just go to archive, I think it's a bit of a slightly underhand way of doing things. But yeah, I think that's a significant one. Can I talk about lending? Am I allowed to do that one now?
Yeah, crack on.
Right. So those of you that borrow money, so there's quite a few property investors I can see coming up on the hello list there. We've gone through the C-bills, and they were handled, I think, very well. You had to go through a few hoops to get them, but they worked. Bounce back loans. What a fiasco. You've got people who are claiming bounce back loans when they really shouldn't. And I know there's only, we're all amongst friends here, so I'm not judicious with my language, but I never am I? There are some gurus, in quotes, saying, claim as much as you can, go and buy some more assets, go and buy some property, go and buy a car. Fine. The banks have jumped in a hole and pulled the hole in after them. Why? Because bounce back loans were handled so badly. All right. They're now at that point of saying, well, they didn't actually abide by the rules of the British Business Bank, which is where it was all published, all the rules were published. There's an interesting one for Dan and I. We smile about it. We had a client come to us on a Thursday, come to Shannon, one of our co-directors. Will you assist me in committing fraud? That's not actually the words they used, but that was the implication. Of course, Shannon declined. No, we're not going to falsify the documents for bounce back. Friday, they wish to terminate us as their accountants because we're too conservative. Interesting. Hmrc are not investigating those. They are not investigating those. So I spoke to four different banks, the big dogs in 4 different banks. What are you doing about it? Well, obviously it wasn't our fault that we gave them the loan. It was because the individuals fraudulently made an application. So we've strengthened up our fraud team. We've employed more people, and we'll now be investigating for fraud. And if we can't sort it out, the police will. Wow. Don't like playing with Hmrc. I certainly don't like playing with Customs and Excise. Really don't want to play with the police. I suppose the only comfort of that one is that so many got it wrong. But we'll see how that one plays out.
I think one of the things we've seen with the bounce back loans as well, it's fair to say that the banks have therefore had a big knock-on effect in terms of the normal stuff that they should be doing, setting up accounts for new businesses, setting up different accounts for people who are looking to switch.
Absolutely.
It's obviously made them very, very cautious about new custom.
And I think that's the part that I was going to go to next as well. So we're, as always, Daniel and I are always on the same wavelength, aren't we? We've now got the restart loans. That's not going to be quite as simple as those bounce back loans, folks. I think you're going to have to go through some hoops on this one. So if you need the restart loan, go through the hoops. As long as it's legitimate, you can claim it. If I can just go on a stage from that, though, so we've got CBILS out there, we've got bounce back loans out there, we've got restart loans going out there. Now the government is backing 95% loans for homeowners. So that stimulates the property market again. We can talk about property prices if you want. Is there a lot of money floating around now for investors to borrow money? So how much more difficult is it going to be to actually go to the bank and say, I need to borrow some money for this reason. It's not part of these schemes, which is guaranteed by the government. Will you please lend me some money? I think that's going to become a little bit more difficult now. So be aware, I think there'll be a little bit less cash floating around, which means your lenders are going to put you through more hoops to get their money.
The full details on the restart loan coming out, I think, is going to be quite key as well, because obviously the time span, initially when a lot of these things were announced, we've seen obviously extensions to them, but nothing. I think the original plan was that they were going to be based on 3 months of lockdown or 3 months of the economy stalling, not a year. So even though they've obviously relaxed things on the bounce back loan in terms of repayment periods, potentially pushing back 6 months before that first repayment kicks in, interest-free holidays, all those sorts of things that have been announced, I think it'd be interesting to see whether you can use the restart loans to do anything about your old loans. So are they going to allow you to repurpose the bounce back or the CBILS under something different? Again, if you've taken it out with a different intention or a different timeline that was going to work to.
That's a very good point. If I just go back to the fiasco of the bounce back, because I don't think I really just find it difficult to believe that the restart will be as bad. If you have had the bounce back loan, I think it's really important to get your paperwork straight, and actually wouldn't be a bad idea to go back to the rule book, which was the British Business Bank, including the FAQs. Look at what the bounce back loan was meant to be used for. Now look at what you've used it for, and go through the rules and tick off, this is what I've done. And have you got evidence of the fact that you've done it? Those that speak to me will know I'm constantly banging on about, give me evidence. If there's an inquiry, if I've got to defend you. I know Paul's on here. Paul, Dan and myself have got to defend you. We want some evidence. We want some bits of paper that says we did do this properly because, and there's our evidence. So go forward, please, but obviously keep an eye on the back door as well. Just watch that you're getting evidence ready to defend yourself if there's a problem. That will lead on later on. I'm sure that we're going to talk about Hmrc and investigations, but I'm not sure if you want to do that now, Daniel.
Well, yeah, I think if we do, I would say, because of one of the big areas where we're already starting to see some questions is with regards to self-employment, income support schemes that are there. So
let's do that.
I think that's going to be, obviously that's been announced that potentially obviously brings a wider scope of people into that with the use of the most recent tax returns that have been filed. But we've certainly seen, or from my experience of talking with clients around that, the evolution of the grants as they've come through in terms of restrictions on there, actually who should be accessing them. And we know that the values attached have changed, but I think that's going to be one, especially with the third grant onwards. With, I think they're a lot more restricted in terms of who should have been claiming them. And that's going to have a big impact, I think, and a big opportunity for them to be checking what's going on with regards from a tax inquiry point of view.
Yeah.
My key thing, and it's banging an old drum in terms of what's there, is that I say, especially with the first and second, like most self-employed people I spoke to were legitimately able to claim those. But they also were working, and that was obviously one of the key issues from to coin a phrase, with the excluded people from the support. That was one of the issues, because of obviously if you were furloughed as a director or something, then you couldn't really work within your business. You're restricted to those statutory duties. Self-employed could still work. So, there are people that in that initial lockdown, I'm thinking in particular trades have been well supported in terms of trying to get construction to continue. The impact on their tax return this year could be quite a shock to them, I think, because if they may have earned at similar levels over the course of the year, plus 2 lots of grants, which weren't insignificant sums. So, I'm to say bang an old drum, but people to get ahead of what January next year might look like from a tax point of view, is going to be really, really key for that. And we know that as soon as you're not paying on time, as soon as you're late with filing something and so on, is that, you just keep yourself open to that extra scrutiny that might come from, Hmrc inquiries.
Mm. And there's a heck of a tax bill coming. They might well have earned on their self-employment because you feared that things were going to go badly. They didn't go quite as badly as you thought. And you've got some grants and furloughs, which are taxable. Now you've got to pay tax on it. And you've got the POA, the payment on account, if you're self-employed. There's a biggish tax bill coming. Put some money aside. And on behalf of the accountants, can I say, please get your damn paperwork in early. Don't leave it to the back end of the year. So it's an even, the surprise is the same size, but you've got less time to plan. So
there's an additional complication with that potentially as well for people, is if you were hovering somewhere around the 40 to 50k mark, those additional grants, if they put you over the 50k, not just higher rate that starts to come into effect, but if you're receiving things like child benefit, so on, that starts to become repayable also, which again, from my experience, is that we see that one not considered very often, and it can add quite a significant figure onto a tax bill that you may not have planned for. So,
and obviously, I know it's one that you and I have talked about, Dan, which is the CIS guys. The guys on the construction industry. They're used to paying tax at source through what's called the CIS scheme. They're used to getting a rebate. You haven't paid CIS on any of these furlough monies. So I wouldn't start counting on the rebate yet. You might not get one. In fact, you might have a tax bill. So there's lots of long faces going to happen later in this year because of tax bills, because you had support. So I think the sooner you find out about it, the better. Nothing we can do to change the numbers, but at least actually get yourself into a situation where you can deal with it.
Yeah, I mean, there's still, obviously people are maybe pushing it a little bit tight with a month before the end of the tax year. But there's obviously some, I think, as you say, there was a lot of rumour going out before the budget with regards to pensions and relief around pensions and so on. So I know, we're certainly not advisors, and we work alongside good people that can advise on those sorts of things. But, that was something that I think people were expecting that might be taken away. But there's still maybe an opportunity to do something around that if you start, if you're going to be around that higher rate bracket and so on.
There are things, but we need to do the planning.
Yes. Yeah.
Dan, I can see a question come up from Mark about bounce back loans. Can I deal with that one? Because before I go too far away from the topic.
Yeah.
Hi, Mark. The question was, if I took a bounce back loan just in case, not used it, and chose simply to pay it back, assume there's no problem there. I agree with you. However, what I would suggest is the correct course of action. Look at the rules of the bounce back loan. Let's imagine, we're sitting together. I will get the rules out for the bounce back loan. They're defined within the British Business Bank. Don't just go to the front page of it, go to the FAQs, go to the detail. I would go through it and say, at the time that you were making this application, what did you think was going to happen? And is there any evidence of it? So were appointments being cancelled? Was your diary getting empty? I don't know. What evidence have you got? Because I want to justify, why did you do it? Anyone that listens to me, I bang on about this phrase of clarity of intent and then evidence of your clarity. So what is the evidence of the intent that you had when you made the application, and how can you evidence that, please? Now, then, was there a second intent? Well, actually, what I thought this was going to happen, and I've got justification for why I thought it might happen. actually, this happened. And when that happened, I didn't know what was going to happen next. So I sat still again. Just get the story in place with the evidence. If at the end of it, you get to the point of saying, actually, my business has done incredibly well, and there are businesses that have done very well during the COVID period, ones that be quite a surprise. And then you can say, well, fine, actually, I didn't need it. The money's sitting there. Thanks ever so much. Last part, Mark, don't just pay it back. You want to get evidence and you want to get it into the public domain. And I know that the days of having checkbooks are gone, but just imagine you've got an account with a checkbook. I would love to see a letter going to the bank manager saying, dear Mr. Bank Manager, I claimed a bounce back loan because then I discovered that this happened. And actually, I'm at this point now, so I don't need it anymore. Thanks ever so much. Here's your money back. But now you've put your clarity in the public domain. So that would be my answer to you, Mark, but it's a long answer.
I think there's an element with that, Mark, as well, with the bounce back loans. I still, let's say, it's the speed of recovery with the economy, with the dates and the measures and stuff that are in place. So I'm not encouraging clients I'm speaking to rush to pay it back. Let's see what happens in terms of stabilizing the situation as well, because I still think there's going to be some ongoing ramifications of what's happening.
Okay, well, Dan and I might slightly disagree with this one then, because I'm looking for that 1 year anniversary, because the 1 year anniversary is where you should be starting to think about the repayments. Okay, point one. But we're also in that situation where, let's be practical, everybody. I don't know about you, but I'm the same. I haven't been out for a restaurant this year for a year. I haven't had a holiday. My bank balance is probably slightly better than I would have expected by now. So I can guarantee you that, in fact, I can tell you now that on the date that we're allowed to go out for meals again, my wife has already booked a very nice restaurant for 4 of us to all go out. And it's not inside, it's outside, but we're going to start spending. So I think the economy will bounce. I think the government referred to it a period of euphoria in one of their documents. I think that was a reasonable statement. There's going to be a period of euphoria. So I think the economy will bounce. How long the bounce lasts, is there a second bout of COVID? Is there a new variant? No, I can't anticipate and predict any of that stuff. My crystal ball doesn't work like that.
It'd be nice to have one.
It would be great, wouldn't it? It would be great.
I think this probably leads quite nicely then, Mark, onto the announcement again within the budget that sort of went maybe under the radar of the typical stuff that we've seen go out there with regards to the inquiry.
Okay. Yep. Let's talk about tax inquiries. I'm sure you all realise that Dan and I and the team, we stay very connected. So name dropping now. Yes, I was chatting to the head of Hmrc's investigations team, the national head of investigations. Paul Riches was talking to the insurers. What are they seeing in the market? So we're all out there gathering knowledge all the time is what we do. Hmrc will be ramping up their investigations. Let's make no bones about this. Go back to what Rishi said. The press haven't talked about it. In fact, I think we were silent about it in our report as well. Not necessarily a mistake, but we were silent about it as well. Hmrc have engaged 1,000 additional investigators. We're not talking about junior members of staff here. We're talking about investigators. I've already talked about the banks engaging more fraud investigators. Then they've got the triple lock. They're not going to be increasing tax rates because the political party wants to be re-elected. So they're not going to hurt all of our workers, but they might well be looking at us as to whether we've done things wrong. You've got changes coming up about tax rates. We're going to talk about tax rates at companies, etc. in a moment, with banding. Wouldn't it be nice for Hmrc if they could investigate, find something you can be disallowed, bump you up a band? That's a really successful piece of tax investigation work, isn't it? There's a huge amount of activity about to happen on the tax investigations. as a company, we will be publicising our opinions on this. Sorry, I know that's a downer before we've even got out of COVID yet. Typical of us, we want to give you forewarning of it. So we can see it coming. So Dan, Steve, Shannon, Paul Gosling, myself, we're all getting prepped, ready to start dealing with tax investigations, because it's going to be, I think, a fairly sizable piece of the work in front of us for the next period of time. So a bit worried about that. What I want you to do, make sure your house is clean. If you think you've done something wrong, you know we are here for you. If your clients are ours, and I know that at least half of the attendees today will be clients, you know we're here for you. Just come and talk to us, will you please? Let's get things prepped ready. Let's see if we can clean the ship if we need to. Tax investigations, I think, is going to be a fairly biggish topic going into the foreseeable future. All right. Sorry, I know Daniel's going to talk about CT and the super deduction and all these other super exciting things. Good, and it's a good technical man. Let him deal with that one. Otherwise, he's going to make me do it. Remember, a lot of those are about claiming allowances now when you've got a lower tax rate, not later when you've got a higher tax rate. Bumping up the bands, etc. All of these things are going to be important. Okay. So, but on tax investigation, I think that's a downer enough, isn't it? So,
there's a question mark in the Q&A just for Mark as well. So, do you think they will target certain size of businesses?
Yes, I think they will, Mark. Small guys. Small guys. Why small guys? If you go and tackle the big guys, and I know we all think they should, go and attack Starbucks, please. They don't pay any tax. Go and attack Amazon, will you? The amount of lawyers and accountants that they've got surpasses in probably volume, but certainly in caliber, what Hmrc have got. That's why these guys structure things the way they do. Who is the softer target? You're looking for, we're all business people. We all look for ROI, don't we? Return on investment. So do Hmrc. If I can put a bit of effort into this one, how much money can I get back compared to I can get a large amount of money from a big boy, but look at the amount of effort I've got to put in. Right? And they've got so much political clout as well. I think they'll tend to hit the smaller guys first. I'm going to be really miserable now. Can I tell you how it works? Don't ever ask Paul Gosling this, because he is ex-Hmrc. And I hope he never admits that this is what Hmrc do. But I've seen it so many times, Paul has, Dan has, we've seen it. They're fighting you and fighting you and fighting you, and they're anticipating that you're paying for us to fight. They're anticipating that. So they come to the point and say, look, I'm going to use imaginary numbers. We think you owe us 50 grand. We'll take you to court. We're going to be really aggressive. Why don't we agree a deal? Because it must be damn expensive having to deal with those damn accountants all the time. Why don't we do a deal? Just give us 20 grand. Right? They'll do a deal with you. Which will lead to the other topic. If you haven't got fee protection insurance, and I'll briefly describe that. If you haven't got fee protection insurance, get it. Absolutely get it. Fee protection is where your accountant sells you a service. I will look after you in the event of a tax inquiry. The accountant is insured. So you're not paying the bill. The accountant is, but actually the accountant isn't. The insurance company behind the accountant is. Right? That's fee protection. That's what it is, basically. Get it. It's cheap. You've got heightened risks at the moment. You've got heightened risks for probably the next 2-3 years. What I referred to earlier on the period, I'm thinking about 2 or 3 years. Cheapest chips compared to having to pay for this out, pay for us out of your pocket. Go and get it, please. So, Mark, companies, also traders, yep, both. Do I think they'll, same question, do I think they'll target a certain size? Yep. Not the biggest boys. I do not think Amazon have got any worries right now. No, Mark, last question you just put up. I don't think you're more likely to get investigated if you have the BBL. The BBL is not being investigated by Hmrc. head of investigations has told me they are not investigating the BBL. They're letting that to the fraud department and therefore behind them the police of the bank. Hmrc will be going for furlough and then coming to see your business and to say, well, can we squeeze any more money out of this particular stone? Right.
Good. Then we've got a question which I'll answer from Dick Ram. If cash flow is not great after first lockdown and still struggling for business due to COVID, what's going to happen for BBL repayment is due in a couple of months?
Okay.
Is there any help available? So yeah, Dick Ram, yes, there is help available on that. Whoever you borrowed the money through should be writing to the applicant 3 months prior to the first repayment being due. And they'll outline the options that are available to you. So one of the measures that was announced back in January when they extended the third lockdown, rather than extended it was just a third lockdown, wasn't it? The option is that you can apply to delay the first repayment for another 6 months. So effectively that will give 18 months between taking it and the first repayment. You're able to request payment holidays if you've already started to make repayments. So after you've made a repayment, you can request a payment holiday, and you can do that up to 3 times, I think it was, across the term of the bounce back loan. And then you can also ask to make interest-only payments rather than paying back the capital amount. Again, I think it was 3 requests that were allowed to be able to do that. And then one of the announcements that was made quite a few months ago now, obviously when the bounce back loans were first introduced, it was taken out effectively over a 6-year period, 1 year free, 5 years of repayments. That was extended out to, you can apply to spread it over 10 years. So there's lots of options out there around people that have taken bounce back loans for the opportunity to manage that, like you say, if recovery and stuff hasn't been quite where you would want it to be so far.
Dan, can I pick up a couple of questions? I can see that Mark has asked a question about fees. Emma's asked Catherine a question. Catherine's commented. So may I deal with these, please? Yeah. If I know who Catherine is. It's the accountant who buys the insurance, and you contract with your accountant. You buy a service from your accountant. So, Emma, that's who you would use. So, thank you. Catherine's just commented on it. Yes, and I know who Catherine is, and yes, she's been a client for 17 years. Basically, your accountant offers you this service. We offer it out in June, Daniel. No, we offer it in May.
Yeah, end of May, renewal kicks in from the 1st of July.
Yeah. So if you're a client of ours, you would have been offered it historically. If you're a new client of ours, you will be offered it in May. We do recommend you get it. If you're worried about the gap between now and May, come and talk to one of us. I'm afraid there is no discount for a shortened period. But your accountant provides the service and we buy the insurance. And Mark asked, what does it cost? I am terrible for this, Mark. And
don't ask Mark what it costs.
Don't ask me, okay? The answer is, honestly, what I do is I like to give an answer. So if someone says, how much it costs? I go, oh, well, it's this. And I'll pluck a number out of thin air. And then all of a sudden, the office is saying, but Mark, why did you we're having to pay £10 more for this service than you've charged the client. Well, too late. I've already said the price now. So you just have to suffer the 10 quid. I'm always guessing the price wrong, but I'm going to guess because I always answer questions. Mark, how much does it cost? If my memory serves me, a typical company it depends on your size. Somewhere between 160 and 220 quid. Mm-hmm. Personal is about 60 quid. But there are very precise numbers, and yes, I've got them, and I've saved them on my computer, but I haven't got it in front of me. So it's that sort of order, Mark. Good.
Okay, where do you want to go to next?
Well, I think it's your turn again. You can start talking about super deductions because you're the man with the cloak. You have the superpower.
I guess that, like, if there was ever a headline-grabbing name for something, it was that, wasn't it? Just to say. I think, as Mark sort of, so the super deduction, for people that don't know, in basic terms, it's an enhanced capital allowance. So if you're buying qualifying assets, you'll get some additional relief for a period between April 21 and March 2023. As Mark's already touched on, I do think this is a little bit smoke and mirrors in terms of timing around it, because it's just it's encouraging people, and if you've got investment to make, don't get me wrong, like it's going to be a useful allowance to have if you've got investments to make. It's just making people spend that money now, getting relief against 19% corporation tax rather than potentially 25%. Coming in as of April 2023 for obviously businesses over 50k's worth of profit. So they're phased 50k's worth of profit. So super deduction, it sounds good. I'm sure there's going to be some caveats in terms of what it qualifies for as well, because they've already sort of touched on that, it might be for certain assets, and it's certainly not for cars. So it's,
except for electric cars, they did say it was for one version of car. They may be available. They've already said that, but they haven't said it will be. Maybe.
Yeah. So I think that's going to be potentially useful one for people, but just maybe take it with a slight pinch of salt as to the real true value of that.
Okay, can I jump in? Okay, you obviously gather, folks, we're doing a double act, and I'm doing the property side, hence the reason for the banner I stuck behind me today. So I'm going to do a property one. We're talking here about capital allowances. So if you want to go out and buy if you run an engineering factory, you want to go and buy a new milling machine because you really, really, really need a new milling machine, well, fine, buy it now because you've got a super deduction coming up. Now, there are rules about when you can order it and when it gets delivered. For the property people, I've already seen gurus in quotes talking about, oh, great, that means we can get tax relief on the properties we buy. No, you won't. The only property you might be able to get it on are commercial. And yes, commercial can include FHLs. But remember, it's not on the building, not on the appreciating asset. It is on the wasting asset, the capital allowance, normal rules. I'm going to be controversial again. There was a lovely announcement, guessing now back in January, I might have lost the date, might have been December, can't remember now, where Hmrc have come out and said, we're really worried about the capital allowances and the R&D tax credits, because the people who are out there selling this are salesmen. They're not regulated, which means Daniel, us, Riverview, Property Tax Advice, we are regulated. If it goes wrong, you can have a go at us. We're regulated. So can Hmrc. The people doing all the R&D tax credits and the CA tax credits are not regulated. All right. So if you're going to go down the path of CA claim, and if you're a property person, as well as regular non-property business, be careful about how you go down the CA claim process. You've been warned. They actually said they don't like the way it's being done. So heads up, folks. So come and talk to Paul Gosling or myself or Dan if you're interested in the CA and R&D. And that would include the super deduction. I think that's enough on super deductions, isn't it? Do you want to take your cape off now?
Yeah, I think so. Let's just answer a quick question that's just popped up. So we've got from Lisa, is there any future grant support coming for directors of a limited company? No, in short, there's nothing new that's been announced in regards to that. The only slight change really, I think, with the schemes and stuff that were there was really just around self-employed income support. So that's not directors. People that are registered and file self-employed pages on their tax returns. They might pull in a few more from including the 2019-2020 tax returns. I think I was estimated about 600,000 people that they thought that would therefore get support.
Yeah, extra 600,000.
But we see, the figure that is often getting quoted is the 3 million, isn't it, excluded? So there's still a hole there if that's a true figure.
I'd like to deal with the excluded. I'd like to deal with the excluded, but I'm going to be the controversial one again. So I think Daniel knows what I'm going to say, but do you want to stop me or try and keep going?
No, I just served that one up for you, Mark. Sorry.
Yeah, thank you very much. Lisa, I do not need any abuse from you, please, and anyone else. I just don't need it, okay? We run businesses, and we do them tax efficiently. The reason that we take very small salaries and we take more income as dividends, including potentially having other family members in the dividend pot, in the dividend pool, is because it's tax efficient. We pay less tax. The excluded, and I've had this debate, and every time I try to have it as a sensible level, I get shouted at. So please don't shout at me. The reason the excluded were excluded is because they didn't pay as much tax. I do understand the pain. I really, really do. I've got so many clients, good friends, and I know the pain. I get it. Especially if you've got a new business. But if you're grey head, you've been running your business for 30 years, super tax efficiently. Yep, we've had a year of real pain. Now, we're in a slightly different place because we might be grey head. The new people are in a different place to us. I get it. Now, Rishi, back in the autumn, summer, said, I understand the problem. And he explained it's because of you don't pay as much tax. You don't pay national insurance. That's why we do low salaries and big dividends. We don't pay national insurance. If you don't pay national insurance, why do you expect to get more support? You pay less tax. You don't. Why do you expect support? Maybe we'll have to equalize things. He warned you that he may have to equalize, and the more and more that the excluded complain, the more and more they justify why he should do something to equalize your taxes. Now, one of the ways of equalizing taxes, and it's super easy. So again, I know I'm being miserable, I'm being controversial, but we are talking about opinions, okay? Super easy. At the moment, directors are not subject to the national minimum wage or the working time directive. That's why we have directors' fees. We don't have salaries. How easy is it to require us to be national minimum wage and working time directive? Just apply it to directors as well. So now I'm working 40 hours a week. I have to take my £10 an hour or whatever, £8.92 or whatever the number is. Damn, I've got to pay national insurance, and so is the company now. So there could be some bad news coming because of the angst that the excluded have had.
I think slightly unconnected to directors, but very, very linked to the tax position around it, was the recent Uber case about self-employed versus the worker status. It's got a lot of headlines about being a great win for the drivers. I don't think they quite realise what the ramifications of that going forward might look like in terms of, as you say, it sort of set a tone, I think, for a direction of travel on other taxes, whether that's directors of limited companies, self-employed people. I think that's quite a big case that's happened very, very recently that I think will set a tone for something.
Can I do a sales pitch for accountants for a moment? If you're using cheap accountants, this is not the good time for cheap accountants. It's the time for good accountants, because there are changes coming, folks, and therefore tax planning is going to be necessary. Whether it's mine with working time directive, national minimum wage, because if I was Rishi, that's what I would do, because it's super easy. It's very difficult to argue with it. Or whatever it is, you will want to be organising your tax planning around it. Okay. So sorry, sales pitch.
If that comes in, Mark, does that mean we go back to just the 48-hour week?
Yeah. Yeah, wouldn't that be nice? We mentioned super deductions and the fact of you can take a deduction now under your CA rather than spreading it out into the future. So Good if you need to buy something, no problem at all. But now you're on standard 19% tax. The same thing with the rollover relief, losses relief. If you've made a loss during the COVID period, and an awful lot of firms have, you could roll backwards for 3 years. It's normally 12 months, but now you can go 36 months. So you can claw back and get a tax rebate. Well, that's fine, but under the current rules, we can roll back 12 months, or we can just keep rolling forward continuously. And I'm not aware of any limit on that, Daniel. Maybe I'm wrong, but
no, unless there's any significant change in what the business is doing, then that loss continues to be used.
Yep. So rolling forward, so if you are anticipating you're doing some budgetary work, strategy work, forecasting work, guess what? Yes, please, I'd like you to do some. And you can anticipate you might be higher rate, your company might be in a higher tax band later. Then maybe that rollover, if you roll back isn't needed. Not rollover, roll back isn't needed if you can take it forward. We talked about bans, Daniel, but there are no bans being published yet. We don't know how they're going to work, except, Daniel, we were chatting this morning and you were explaining the marginalised relief.
So with obviously corporation tax, I've already seen it bouncing around quite a lot on various comments on people's just immediate reaction to stuff about trying to manage this 50k number in terms of for when your rate of corporation tax might change. Talk about separating out stuff from a business, which I know Mark will go into a little bit more detail on. But this is really going back to, I think it was six or 7 years ago.
Yeah.
Where we had a very similar type of scheme in place where you had what's known as marginal rate of tax, and not to get too techie on it, but effectively the more profit you made, the more tax that you paid up to a certain rate. There was a big thing that just caught lots of people out where they had multiple businesses, whether it's a group or otherwise, or whether it's associated control. Which brought all that together, which obviously then upped the rate of tax. And from the characteristics which have been outlined so far in a bit of detail that's been released, it feels to me that it's very, very similar to that. So, you, Mark, I know you're going to talk about like some of the implications of the separation.
Yeah.
But equally, actually, like it might not be the option to do anyway with the way that this is going to be grabbed under the new rules.
Correct. Koshi, you've just asked a question which Daniel has just answered. If you have a number of companies, is it likely that the profits will be considered on the whole group, or will the 50k apply? Associated company rules are probably going to apply here, so all your companies will be added together and taxed. Okay, let's imagine that associated company rule doesn't apply. All right, just imagine it doesn't apply. Therefore, you say, look, I've got a business, it's £250,000 profit. Actually, there's 5 divisions in it. Can I split it up? All right. We've already got the rules about that. It's called disaggregation. So we have rules existing now for disaggregation. Those rules apply to VAT. Those are VAT rules, but obviously customs and excise and Hmrc are the same thing. Now, how easy is it to say those rules now extend to all taxes, corporation tax as well as VAT? Super easy, nice and tough rules, typical customs and excise type rules, nice and tough, and it will really stop you disaggregating. Okay, so whichever way you try to jump on this one, either you try and disaggregate, in which case come and talk to us and we'll do the test. I think it's 5 different tests we've got to perform to see whether you are disaggregating or not. So we'll do the 5 tests with you, but you might get caught in associated company rules anyway. So not sure that splitting up companies is going to be the right thing to do. You know that as a firm, we have specialist branches. Obviously, you've got Property Tax Advice Limited. We've got Expat Tax Advice Limited. I don't know how many of you know, but we've actually got 8 of them altogether. And then we've got Riverview. So, and they're all run by the business partners. So we're going to get caught in associated rules and there's nothing we can do about it because they are associated companies. Okay. If anyone's ever interested in what the 8 different specialties are, please ask one of us. We won't use this for sales pitching. Disaggregation, I don't think, is going to be a good idea. Okay. Possible, but unlikely.
I mean, even Mark, even with the 5 or so tests that it is to do it, again, from my 15 years of experience within this, is how many clients still get that bit wrong, even if they've gone through the hard step to try and separate it.
But they all get it wrong. It's very few that get it right.
I think one of the tests, if I'm right, is around financial interdependence. Yep. So it doesn't have a reliance on one of the other businesses within it, and that's the number one thing that you just see go wrong so many times.
Okay, well, the 5 tests, heck, that's a test of memory now. The 5 tests, one of them is computer systems and your systems and processes. How many different 0 packages do you have? How many computers are operating? Are they operating different computers, and are you from the same location? So are you using the same office? Are these owned by the same people, the associated people again? It is exactly as Dan said, interdependence. So one company is funding another one or loaning money to another one, or you're claiming all your expenses through one, you're not claiming expenses. They're interdependent, right? I think that's 4. I can't think what the 5th one was now. And I see that Mr. Gosling is online, and he's got a good point he wants us to make in a moment. But disaggregation, really difficult to achieve. There's a lady who's spoken already who has done a proper job of disaggregation, and I think she's done a good job of it. 2 completely independent businesses, and then not that they're associated, but then they are independent. So it's doable, but it's really tough. Okay. What's your next topic? Because I've got one more that I want to do.
You crack on with your next one, Mark.
Okay. This is for property people. I was doing a presentation. I've been doing presentations like I'm going out of fashion on this budget. Property people we're talking about now property investors. Okay. So I'm going to do the property tax advice bit. Okay. Property investors constantly worry about, do I think there's going to be a price correction on property? Property prices are too hot. There's bound to be a crash. Let's not call it a crash. Let's call it a correction, shall we, please? First of all, I think it's a ridiculous question, truthfully. If you're a property investor, you're in the business for yield because you're in a long-term game. So whether you buy a property that was £100,000 last month, but this month it's 102, why do you care? Really? Because you're going to hold on to it for 10, 15, 20 years. It's yield. So I don't think the price always matters that much. Yes, it does to the developers. Our country, we've commoditized property. We treat property like cans of baked beans. We just trade them now. Okay. Hence, we've got such a big property market in this country. The reality is the country has got out of every recession except the 2008-9 one. That one was because of the banks running out of money. Every other recession before that, we've got out of it by stimulating the property market. If you can get people to buy houses, then they're going to buy a fridge. They're going to get the painter in, the electricians in, the carpet people in. They're going to buy the stuff, right? Sell a property, buy a property, stimulates the market. It's so easy to understand. So they're going to stimulate the market. Hence, we want a generation rent to become generation buy. Yeah, what you really want is to stimulate the market. 95% mortgages. Okay. Prices are going to stay hot. How long for? Pluck a figure out of thin air. 18 months. They're going to stay hot. Because you've stimulated one end of the market now, which will cause more properties to be on the market. So that there's going to be a lot of stimulation in the market. Mm-hmm. I think property prices are going to stay quite hot. Developers, your opportunities to get flips, I think, are now restricted, because how much BMV, below market value, is there out there? Not a lot. If you're into purchase lease options, I think your option prices on a 3-year, 5-year option is going to go up. You're going to be bidding quite high now. Developers, back to you. Yeah, you're back to brownfields, and you're back to commercial to resi conversions. So there's plenty of work for the developers, but I don't think the traditional flippers, what I used to do, I don't think that is a great strategy right now.
Vikram, I noticed you dropped the question. That's something that's so personal to some of these circumstances. I would suggest if you want to discuss that in more detail, to contact myself or Mark with regards to that sort of one, I think.
I saw the question, which is why I started halfway through thinking, nope, I don't really want to talk about that one right now, because I think it is really personal to you, Vikram. So by all means, contact us. Cheers, matey. Thank you for the response.
Okay.
We're 2 minutes away from finishing. If there's anything else for you, Daniel, because I'm not done.
Yeah, no, I think they're the main things. I think for me, obviously, I think the only thing that we haven't mentioned, but it's really included within the report and stuff that we've put out there, is just with regards to those additional grants for businesses that have remained closed. So I think that's going to be key for some of those businesses reopening, especially in the hospitality arenas, and the continued VAT around that as well. We know we've helped a lot of clients in that sector with some of the complications and thought processes that needs to bring around cash flow and different bits and pieces. So
yeah,
I think they're the main other things. I think we've covered off everything else. So.
Good. So perhaps if we can just leave we've got a minute left or 2 minutes left. If there's any other questions, if there aren't any other questions, show a bit of love. Can I have some comments to say whether this was worthwhile listening to? It's nice to see that people weren't dropping off during the middle of it. So if this was good, thank you, Bikram, for that response. It'd be nice for us to know that it was useful for you guys. But if there are any particular questions, we're watching that coming through. We'll try and pick them up. If not, we're here. We're here to help. That's what we do. We care. So, and I think that's about it.
Good. So thanks everybody for attending. Really, really appreciated. As Mark sort of touched on, hopefully we can, if these are useful, we'll look to do some more and see how we can keep helping you and add value, hopefully, to your thoughts around it.
Yeah, and obviously, if there are particular topics, I'm sure hopefully you've seen our video channel. Yes, I created it, therefore it's in the wrong name. I put it in my name. I apologize. We are rebranding, and once we've done that, it will go into the right name. If there are things that you want us to deal with, just drop us an email and tell us a video about or a webinar about, and someone clever like Daniel with the tech will decide what we're going to do.
Excellent. So we'll leave it at that and log out. So thank you again.
Thank you, everyone. Bye.